Good day. This is the Eye of the Storm podcast for the big picture technical update for the S&P 500 being recorded on Saturday, February the 24th, 2024. I also will be doing an additional podcast, separate recording and posting on the NASDAQ 100, where again I will be joined with Sasha Goring. And we'll be going over both our preferred and alternate counts. Here in the S&P, I am continuing to just build on that we are in the process of finishing a primary B wave counter trend rally. And I have spent a great deal of time reviewing what I would consider to be an alternate count here in the S&P. Now, right now, I'm just going to share where I get stuck. I get stuck right here because if I have to drop this down and consider this a possible cycle 4 or even a primary 4, right? If I have to back all this up and detail it back down to where this is only primary wave 3 and this is primary wave 4 and we're in a primary 5th wave up, I have a lot of problems right in here, because what it does suggest is that it's 1 2 1 2 3 4 and 4 overlaps 1. So none of that fits in terms of trying to count out this current move up off of the October 22 lows as a building 5-wave pattern. The internals don't work and nothing seems to work. So I'm leaving it as A, B, C for intermediate wave A of primary wave B, and then intermediate wave B of primary wave B, and that we're still within that intermediate C wave. So leaving it there, I've made one adjustment, and that of course is for the contract roll when we moved out to March, and you'll see it more clearly here, that October 2022 low basis the March contract, which was active at the time, comes in at 37.2675. So I made that adjustment, which changes these levels, just alters them a little bit. It actually pulls them a little bit lower. So with that in mind, let's go over the count as is. And that is, again, that A is here, B is here, and here we have intermediate wave A of primary wave B. And there's the B wave. So we continue to place where we believe the whole where wave C would be equal to wave A. Let me start there. And that again remains at 5192, actually 5187. There it is, hiding in there. So we still have that cluster, but the cluster has now moved up. Because again, let me continue to bring this down, and then we'll fill in these blanks here. So I'm going to come down to the 4-hour chart, and I'm going to open it up from there. So we just basically see inside this minor wave 5. And a minor wave 5, again, consists of 5 waves of minute degree. Here we have 1, 2, 3, and 4. Now, I've made an adjustment within this internal count. And the fact that this here was a running correction, so it was a running wave 4, which is very acceptable. But I moved wave 1 back down. So instead of being 1, 2, 3, because I went back and I was reviewing my own, or not my own rules, but the rules for expanding and contracting triangles. And a diagonal, in an ending diagonal, it is stated by more people, more analysts than not, that wave 3, whether it is within a diagonal triangle, whether it is contracting or expanding, wave 3 cannot be the shortest wave. And the fact if I had put wave 1 up here, it kind of puts pressure on wave 3 and put even more pressure on wave 5. So I moved it back down, and still we have wave 1, which is an ABC, wave 2, which is an ABC, and wave 3, which is an ABC. And there's zigzags. So 5, 3, 5. And then we have wave 4, which was the running, which is just a 3-wave. And then we have wave 5, which started the day after. Well, actually, yes, it started as NVIDIA reported their earnings. And that rally that came the day after just skyrocketed the market. And anything that is even related to AI seemed to catch a very strong bid. And we saw some large just return of capital. Now, I want to just kind of also just bring in a couple of things that really start to kind of build that we need to consider an alternate account. We need to consider some things that could be going on. That what we see coming in is that there just likely is a continuation of this tech rally, a continuation of this buildup. When we see these massive switches of long versus short, and just as it's all technical numbers, but we saw a buildup of the shorts coming into NVIDIA's earnings. NVIDIA's earnings come out, cover all those, go long again. So we're getting this, I don't want to call it flip-flopping, but a lot of movement as funds and traders and desks and people start to try to figure, where does this all end? And was that initial, right? Remember that NVIDIA that had crossed the $700 mark and then spent several days just retracing back down before again then exploding and making its way up towards 800. So where can the stock end up? Well, of course, even NVIDIA is in uncharted territory, as I call it. It's higher than it's ever been. So we don't have points except for Fibonacci. We can draw Fibonacci sequences connecting particular waves to each other. And there are others that use Fibonacci, but again, they're connecting particular moves to present themselves with how high can that stock now go? Then we have just the continuation of analysts that are taking the current earnings, projecting forward if this continues, or if we see a continued increase, et cetera, within the earnings, and then how high can that stock go? And so they come up with these numbers. So is $1,000 a share out of the picture for NVIDIA? Not really. No, it's not. Is it going to be fair value? I have no idea. I think right now that we have quite a few, even within the Mag 7 and within the S&P and within the NASDAQ, a lot of stocks that are very overvalued. Now, we also have to consider what's going to be the catalyst that's going to knock the markets off of their, excuse me, knock the markets off of their high purchase, so to speak. And while it's likely not going to come from within the market itself, like one of these companies is just going to come out with really bad earnings. It's going to be linked likely to the economy, or it's going to be linked to something outside of the US. And there's a lot of things that can really affect our markets, as we know. So again, we have geopolitical situations. We've got political situations within our own country. We have a lot of things that could really shift many things and create a mad dash scramble to shift money to take profits, to do a lot of different things. So, but in lieu of all of that, what I personally, I do not make recommendations, and I'm not calling a top or bottom, but I am for myself, um, being an ex-market maker, being an ex-options trader, and still trading options. I think that you need to consider the tails, and what that is you're buying far, you know, um, you're buying different positions that position yourself with out of the money. What happens if something just really goes, it caves, and it just starts to flip and head lower? And so you just work the tails. And if you're working a short position, it's like, where do you want to cover it? You're working tails to the upside. You're working tails to the downside. And so there's a lot of different things that you can put into place to protect yourself. But in any case, because again, I'm not sure what it's going to take. I'm not sure when. I mean, we can give time sequences, Fibonacci time sequences, but as to exactly when, it's just, I think it's just too difficult to kind of pinpoint and say, oh, here is where everyone's going to switch. We cannot forget that there's still a tremendous excess of capital that keeps flowing back in. So fund managers, asset managers, they have a lot of capital. And until we see that capital being removed from the system, from the monetary system, I don't think that we're really going to get where that money evaporates, that money's gone. Now, if we had even a mini crash, a sustained move down, as I do believe we could get in a primary C wave down, it would be a sustained move down. So we would see just this vacuum, possibly. But again, I don't know. I don't know what the catalyst is going to be. I have too many choices. And so I continue to just plot it as we're going up. So back to the S&P right now. We have within minor wave 5, minute 1, 2, 3, and 4 in place. I do believe it's now still a slightly expanding diagonal. And so the upper boundaries, right, we connect 1 to 3, kind of come up, and they continue to intersect between 51.72 and 51.87. Now, let's take a look. What's going on there? Well, we have minor wave 5 at 51.70, I'm going to say 75. We have minute wave 5 at 51.72, 74, right? Same area. And then we have the C wave. The intermediate C wave comes in where it will equal wave A at 51.87. Now, if I take this back out to the daily chart, we can see where that continues to intersect. If we should surpass that 51.87 level, then it intersects again. See, so the market would, if we come down, again, right now we rally strongly. If we come back down, reach closer towards the bottom boundary, and then rally again, depending on how long it takes to get there to there, you can see how the market can reach these upper levels. So we have 1.382 again for the irregular B, the primary B, that's at 52.21. If we surpass that level, you're going to then run into that we have minute wave 5 coming in at 53.07. So you can see how it just continues to build. We have minor wave 5 coming in at 2.618 at 54.63, and that would also be the next intersection, comes in up there. But we're out really looking into April or later. Could this go on for another month? Absolutely. I mean, what's to say that it won't? A lot can happen between now and April. A lot can happen in the month of March. So we still have a lot of things we've got a Fed meeting, we've got, economic numbers, et cetera, all coming out continuously. So again, these are where they intersect. And I'm going to bring it back down because we got to deal with the now. So again, dealing with the now, I am still looking. I need to change this. And actually, what was this high? Because I think what we may have completed on Friday at 51.23. What is that high? Come on. Lord, let me just go like this so I can get to that high. This high was 51.23. So I'm going to go over to here. I'm going to edit these properties, and I'm going to put 51.23 because I think that may have just completed. I think it was 75, right? And we're going to say okay, and now we're back up to here. Now, so that it adjusts, because you see, if this is going to be the A wave or the first wave, so it's a 5. So basically 1, 2, 3, 4, and then we get that rise up to 5. And we put an A there. So it's A of minute wave 5, right? There's going to be a zigzag, right? That's the other thing. That waves 1, 3, and 5 within an expanding are zigzags. They form zigzags. What's a zigzag? A 5, 3, 5. Overall, waves 1, 3, and 5 will form ultimately 3 wave patterns. Okay, those are going to be labeled A, B, C. But within that A and the C, they're both going to be 5s. So it's a 5, 3, 5. I know it becomes a little bit more confusing, but just trust me that it's like we are watching very carefully to make sure that we're following what the pattern should be and that we're not determining. So if you follow me on the S&P, you realize that I did say that, well, very possible we need to make another new high before we start to put in this B wave. We did that on Friday. Now, what would be minimal? Minimal on a B wave should be 382 to 50%. So we're not looking for anything massive, but it's going to feel massive, right? Because we're dropping from 51.23, almost 51.24, and we have the potential to come back to 5,041. I don't necessarily see it coming all the way down because remember, it's a zigzag. It's not a flat. So it's not a 3-wave ABC flat. It's a zigzag, and a zigzag that doesn't come all the way back down. You might get down to 618, but I would not be looking actually for more than 382, maybe 50%. So there's where we're looking for. And it's a B wave, so it should come down in an A, B, C. Should do a 3-wave down. And we got the larger doing 3 waves up, and that internal should be 3 waves down. And then we rally again in 5. So internally, I am looking for some follow through to the downside. The only outside of that would be if we turn and we run higher again. We don't find any resistance until we start coming into here, which is 51.58. And so that's the upper boundary. And it could get there and then reverse in terms of putting in the B wave. I think that we might continue on it now, but if not, and we still have to put in a top to complete the A wave up, then our next level is much higher. It's 51.78. I mean, it's where they intersect. And then we have, actually it's not 78, it's going to be 60. And if up here, we've got it where it comes in at like 61, 62, 63. Outside of that, we have resistance at 72 to 74. And then 87. So those resistance levels remain the same. It would be the most shallow B wave I've ever seen if it just goes from here. So I would be thinking that we go and we start to pull back before we actually, I gotta get rid of that, before we start to rally again. So 50.84, 50.63, 50, excuse me, that's a different one. 50.84, 50.60, and 50.41. The 1.236 has been exceeded. Let me just get rid of that because that actually should not We're going to put the next one in on the upside. Okay, so now that's cleaner. 84, 60, 41. Those are our support levels coming down for the B wave, and it should be 3 waves. Now, I want to just review very quickly where we have for next week what we have coming in. So we have next week on Monday, the only thing we have is new home sales. Tuesday, we have durable goods and consumer confidence. On Wednesday, we have the GDP. That's going to be absolute first revision to the fourth quarter GDP. We have advanced U.S. trade balance in goods, retail inventories, wholesale inventories, and that will be Wednesday. On Thursday, the 29th of February, we have initial jobless claims, PCE index, back again, end of the month. So we have the PCE, the core, and all of that. And then we have the Chicago Business Barometer and pending home sales. And then on Friday the 1st, we have the S&P U.S. manufacturing, the PMI, the final for February. We have ISM manufacturing for February. We have construction spending for January, consumer sentiment, the final for February. And then we have all these Fed out talking on Thursday and Friday. So they're continuing to make the rounds to talk up whatever they talk up. So that's kind of could be a busy week in terms of getting this B wave done and getting ready to move forward in the C wave up. And that's where I'm going to end this for right now. I'm going to try to keep it a little bit more tame. And again, we'll be posting the NASDAQ shortly. So thank you very much. The next update will actually be on Monday. Unless we really have something strange happen tomorrow within the opening of Globex, look for the next Elliott Wave update on Monday, February the 26th.